Are you worried about what the One Big Beautiful Bill means for your wallet? Heard whispers about changes to your taxes, retirement, and even Social Security? I'm Justin Dean, your host. And if you're like most people, the One Big Beautiful Bill, signed into law just a few weeks ago on July 4th, 2025, has probably left you with a lot of questions. But this isn't just another piece of legislation. It's a sweeping change that touches everything from daily spending to your long-term retirement plans. And that's why we're here today, to cut through the noise and give you clear, transparent, actionable insights. So what exactly is the One Big Beautiful Bill, or the OBBB? It's a comprehensive new law with major provisions. But for you, the individual, here's what you need to know about the tax year 2025. First, it makes many of those tax cuts from 2017 permanent, reducing your overall tax burden. Second, it introduces some brand new temporary deductions, and we'll dive into those specifics in a moment. Third, it increases the standard deduction even further. For 2025, that's $15,750 for single filers and $31,500 for married couples. Let's talk about these exciting new deductions and what it means. This is a big one. If you're 65 or older, the OBBB introduces an additional $6,000 deduction for single filers and $12,000 for married couples. This is in addition to the already increased standard deduction and the existing age-based deduction. Think about it. A single filer age 65 will now see their standard deduction totaling over $23,000. For a married couple, both 65 plus, it could have their deduction over $46,000. That's huge. These new bonus deductions phase out for higher earners, starting at $75,000 for single filers and $150,000 for those filing jointly. The bill introduces temporary deductions for qualified tips up to $25,000 annually, tax-free overtime income payable up to $12,500, and even interest paid on new car loans up to $10,000. These new provisions could significantly lower your overall tax bill, put more cash in your pocket throughout the year. Now let's talk about how this affects specifically retirement and Social Security planning. While the OBBB doesn't change the core Social Security taxation rules, which we were hoping it would, the new temporary deduction, $6,000 for single or $12,000 for joint, is designed to reduce or eliminate federal income tax on Social Security benefits for a large majority of the beneficiaries. The White House estimates that an astounding 88% of all seniors receiving Social Security will pay no federal tax on their benefits under this bill, which is in stark contrast to the current 40% paying tax. This is a huge win for retirees, potentially freeing up more of your hard-earned benefits for your lifestyle. It's important to remember that this enhanced senior deduction is currently set to expire after the 2028 tax year, so proactive planning is key. Now, for those looking to truly take advantage of their long-term retirement plan, this bill is huge and could open up a fantastic opportunity for Roth conversions. Traditionally, a Roth conversion means taking money from a pre-taxed account like an IRA, like a traditional IRA, and moving it into a Roth IRA. You pay taxes on the converted amount now, but then all the future growth and withdrawals in retirement are completely tax-free. This creates a unique window. If your taxable income is lower now, paying taxes on a Roth conversion at today's potentially lower rates can be incredibly tax efficient. It's like buying future tax-free income on sale. Plus, Roth IRAs do not have required minimum distributions, as do traditional IRAs and most other pre-taxed accounts. This is also a huge way to leave a tax-free legacy to your loved ones. The One Big Beautiful Bill offers incredible opportunities, but also has its complexities. That's where we come in. If you're already a client of ours, we have already taken this into account and we'll discuss this during our next planning session. We recommend getting a personalized tax analysis to see exactly how these new deductions apply to your unique income and filing status, reviewing your retirement income strategy, and considering the potential reduction in taxable Social Security benefits and how this might influence overall cash flows and withdrawals from the plan. Strategically exploring Roth conversions to take advantage of potentially lower tax rates now and secure tax-free income in the future. By doing this, you can optimize your Social Security for maximum benefit, understanding the impact of these new deductions. Most importantly, engage in proactive planning, as some provisions are temporary. Staying informed about potential legislative changes is so crucial to your long-term financial security and success. That's why we're here to guide you every step of the way. Visit our website at deanfinancial.com or give us a call today at 828-855-9833. Let's make sure you're positioned for success. And remember, your future is our focus.